Yesterday, the European currency gained sharply against the US dollar. Likewise, the British pound edged higher. It rose to the level of 1.2420, a new one-month high. Euro bulls were a little less fortunate. The euro ran into 1.0925, the March high, where its upside momentum fizzled out. Yesterday's data from Germany showed that inflation slowed to 7.4% in March compared to last year, but still came in above forecasts. This means that inflationary pressure persists, which is likely to force the European Central Bank to continue to act aggressively. That is why the euro gained value. In addition, traders received data on US GDP growth. Inflation-adjusted gross domestic product increased by 2.6% for the final 3 months of 2022, while economists were expecting GDP growth to hold steady at 2.7%. This exerted additional downward pressure on the greenback. Even the speeches by Fed members failed to support the American currency. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes statistics on UK economic output. Gross domestic product is estimated to have risen by 0.4% in fourth quarter of 2022, up from 0.2%. Traders may also take notice of data on the number of unemployed people and the unemployment rate in Germany. Furthermore, it is worth paying attention to Eurozone inflation data. The consumer price index is forecast to stand at 7.1% in March, well down from 8.5%. However, the core reading is estimated to increase further to 5.7% in March, up from 5.6% in February. This will probably give market participants greater confidence in their expectations that the central bank will keep lifting interest rates. This, in turn, will contribute to a medium-term rise in the euro. As for the news from the United States, the focus will be on the personal consumption expenditures price index, the Federal Reserve's preferred gauge to measure inflation. The figure is expected to remain unchanged at 4.7% year-on-year. The US will also publish data on consumer spending. This indicator is likely to fall, which may weigh down on the US dollar. The University of Michigan is set to publish its reports on consumer sentiment and consumer expectations. These figures are anticipated to decline amid turmoil in the banking sector. What is more, ECB President Christine Lagarde will speak today. However, she will hardly say something new. Against this background, I expect the euro to edge up, hitting a new one-month high. Then, traders are likely to start locking in profits by the end of the month, thus provoking a strong downward correction in late trade. From a technical point of view, the 1-hour Euro-American dollar chart shows that the levels of 1.0923 and 1.0872 act as resistance and support respectively. In the event of a decline, a false breakout at 1.0872 will create a strong buy signal. Thus, the euro will most likely break above 1.0923. In case the price heads straight for this level, its breakout followed by a top-down test will open the way to 1.0975 and 1.1002. At these marks, I recommend going short on a rebound, counting on an intraday correction of at least 25-30 pips. Short positions at 1.0923 can be considered only amid a false breakout. Alternatively, if the price fixes below 1.0872 and tests it from the bottom up, a sell signal will be generated. In this case, the euro is expected to return to 1.0825 and probably 1.0787. At these levels, it would be a wise decision to go long on a rebound to catch an intraday correction of 25-30 pips. Speaking of the British pound, it is worth focusing on 1.2405. However, the best way to make a profit is to buy the pair amid a false breakout at 1.2365 or on a rebound at 1.2328 in the hope of earning on an intraday correction of 25-30 pips. If bulls take control of 1.2405 and the price tests it from the top down following upbeat data on UK GDP growth, the pound sterling will most likely advance to the key resistance level of 1.2443. At this mark, traders are recommended to go short amid a false breakout. If the price surges to 1.2505, it will be possible to open short positions on a rebound, counting on a slump of 35-40 pips. As an alternative, a false breakout at 1.2405 will create a sell signal, thus pushing the pair down to 1.2365 and probably 1.2328. Good luck and have a great weekend.